Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. Now for the next 30 minutes, we'll take all your stock-related questions. So you can write all your questions to us on any of our social media channels or on the YouTube live chat. We'll also be tracking the WhatsApp number that will be flashing on your screen, and we'll take up questions from there as well. Now, before we move on, let me introduce you to the guests for today. We have with us Mr. Sunny Agarwal, SBICAP from SBICAP, and Ayush Mehta from Nirmal Securities. Welcome to both of you, and thank you for taking the time out. Now, before we jump into the questions, let's take a quick look at the markets. Alex, we started on a strong note in the morning, but where do we currently stand?
As flat can be, and I think in this certain situation, one of my colleagues has called it flat as a pancake. That's essentially what we are right now, completely unchanged from the previous close. And as Smriti pointed out, we've given up some gains on the benchmark index. The broader markets continue to hold on to some gains, just about 1/3% each for the Nifty Mid-Cap 150 index, or right now, in fact, even lower than that, and 1/3% for the Small Cap 250 index as well. Perhaps, the market breadth losing out a little bit. In fact, let's pull up the advance decline ratio, and that will probably show you that gap between the advances and declines would have narrowed quite significantly. In fact, yeah, so there you go. A very clear representation of what's playing out in the market right now. Let's take a look at some of the key indices as well. And you will notice that there are a few standout performers. Of course, the auto index was outperforming at the start of trade, but it's no longer the case. In fact, it's losing ground as a pack. The PSU banking pack continues to be the top gainer, followed by realty, media and pharma, but not very big gains to speak of. We are, however, focusing on one particular stock from the broader markets, and that is Sirma. And this is an EMS play from what I have seen, and I must say that I have not seen the numbers very closely. Smriti, what are you picking up?
Well, the results were kind of disappointing, which is why we're seeing a sharp downtick in the stock as well. We saw revenues grow 38% to 709 crores. However, EBITDA was down about 14% to 41 crores, and margins contracted to 7.7% from 11% in the previous quarter. Net profit was down 40% to 20 crores. However, we also spoke to the management of Sirma, and 2 points that were highlighted was their order book. Now, they have an order book of about 4,500 crores, and they expect to execute 4,000 crore of this 4,500 crore in the next 12 months. However, their revenue, they said, is likely to remain at these levels only. So, which is kind of contrary to what we usually have. When you start executing orders, your revenue should start to go up as well. But that's what we got from the management. Now, we will be joined by Sunny Agarwal in a bit. But
in the meanwhile, let's in fact take a very quick check of where the markets are right now while we're waiting for Sunny to join. Ayush, coming to you, good morning to you. What are the key levels for the benchmark Nifty 50 as well as the Bank Nifty today?
Good morning, Alex. Thank you for having me on the show. As we talk about Nifty is taking continuous resistance around 22,125 levels, and today it has made a high of approximately 22,050. We feel there's a big support zone at Nifty at around 21,700 levels, which is its 20-day moving average, which it has sustained and surpassed on approximately 31st of January. As long as 21,700 Nifty is holding, I don't see a big downside apart from that. But if that is broken on closing basis, then we can expect a level up to 21,400. But today, I feel market will be a slightish on the sideways front only. And moving on to Bank Nifty has shown some selling pressure from the higher levels of 46,300 levels. The support zone for Bank Nifty currently lies at 45,800 levels, which is just 150, 180 points from here. If that is broken, then we'll expect a downside towards 45,500. I feel Bank Nifty, there are certain stocks like PSU stocks are still performing okay, but the major Bank Nifty stocks are not doing that very good.
Point. In fact, let's jump straight into the questions then, and I will focus on the technical questions at the start while we wait for Sunny to join. We've got Tushar Kamble from Mumbai, who is asking about Orient Green, which has been doing quite well over the last few sessions. Let's pull up the chart and see where it's currently trading, Orient Green, because he's wondering whether to buy at the current level. Is this a good time to enter? It's in fact at an upper circuit today as well. Oh, very close. Yeah, there you go. So upper circuit. What would you say on the charts though, Ayush? No sellers in the stock, only buyers. So therefore, would you try to venture into this if given the chance?
Well, I feel trading is a little limited over here because of the upper circuit, and it is happening since approximately 31st of January. From the breakout level of 25, now it is 32.85. I'll suggest whoever is holding the stock, they should keep it with a trailing stop loss, and the trailing stop loss should be around 31.75. That is the support zone actually. If that is broken, I feel you should exit because of the continuous upper circuit. We may see a slight retracement in the stock.
All right. Next up, we're talking about Brigade Enterprises. We're seeing an uptick in actually the realty index itself, but Brigade Enterprises as well. It's currently up about more than 1.5%. This one's from Parag, and they want to know if this is a good time to enter the stock.
Well, Brigade Enterprises is looking good at current levels. It has taken the support of its upper band that was at around 1070. If you want to enter, if the client wants to enter at this price, it can definitely be entered for a short-term target coming out to be around 1080. 1080, the CMP, the short-term target is coming out to be 1125. If that is broken, then we can expect a rally up to 1120 in the stock.
I believe we've got Sunny joining in. Sunny, thanks as always for taking the time. We were discussing Sirma a little earlier, and Smriti has broken down the numbers as well. The stock is under pressure today. A little bit of a disappointment. What would you reckon that the fundamental analysis, or what do you think that an investor should do from the long-term perspective based on the fundamentals?
Yeah, thanks, Alex. Thanks for having me on the show. Definitely a weaker set of number as compared to the street expectation. However, what I believe is that in a company like Sirma, where there are multiple sectors at play, so due to due to adverse product mix, we may have seen some pressure on the margins. And more clarity will be emerging out of the analyst call, which is scheduled today. But what I feel from a long-term perspective, the opportunities still continue to remain pretty robust for Sirma in terms of growth opportunity. So entire EMS space is doing well. At the same time, we are yet to hear from Sirma on tie-up for PLI 2 scheme for manufacturing of laptop. And I'm sure the management is in talk with multiple brands to get that contract. And once that is in place, I believe FY25 and 26, we will see a decent growth in terms of profitability and earning. So we continue to remain bullish on Sirma from a medium to long-term investment horizon.
Right, fair point. Let's talk about Tata Coffee. Rashida has bought shares at 215 levels, and they have a general question on mergers as well. They're talking about why do companies go for a merger like HDFC and HDFC Bank went on, and there's Tata Coffee that's going to merge with Tata Consumer as well. Sunny, if you could talk about the stock and the overall merger strategies of these companies as well, and what do investors get out of it?
And also, let me add to that, because she's also wondering whether to add more of Tata Consumer at this price.
Yeah, so Alex, I think the merger issue is already in place between Tata Consumer and Tata Coffee. So I think till the time merger is over, both the stock prices will move in tandem with each other. So I don't know right now, I don't have computation whether there is an arbitrage between Tata Consumer and Tata Coffee at this point of time. But ultimately, Tata Coffee will get merged with Tata Consumer, and the shareholders of Tata Coffee will get shares of Tata Consumer. Coming to the outlook on Tata Consumer, yes, we continue to remain bullish on Tata Consumer as a business. The reason being that company continued to grow well, both organically as well as inorganically. And it is one of the fastest growing FMCG company in India as of now. And if somebody is a long-term investor, he can either buy Tata Consumer or Tata Coffee. Anyway, the merger is already in place. And why usually company announce merger? So obviously, there are synergies between the businesses which can be derived out of the merger, and that is the sole intent for any merger or marriage between the two organizations.
Fair point. All right. SJVN is the next stock that we're focusing on, not doing too much in trade today, but I mean, just look at the last month or so. It's been a phenomenal story. Year-to-date gains of 57%. And it's, I mean, I'm losing adjectives right now. The question is coming in from Dipankar, asking for a short-term and long-term view and whether or not it should be bought at the current level. Ayush, on the charts, stellar pattern for this, I would think. But would you buy at these levels?
Well, I would not recommend buying at these levels, I feel, because the stock has moved up very well from last so many weeks and months, and the weekly and monthly volume in this stock is phenomenal. And I feel there can be a little retracement here, which we are facing since from 170 levels, it is already 146. The ideal buying zone for this stock would be around 128 to 130. If you get this in this price range, I feel that would be an ideal buying zone. And for a long-term target, I feel it can zoom up to 175. Long term, as in 1 month's target, can zoom up to 175 after breaking the previous high of 170. And short term will be around 162 only, because there's a resistance at higher levels.
All right. Next up, we're talking about Yes Bank. This one's from GC Prakash. They've bought the stock at very high levels at 250. The stock is currently trading around 26 rupees. Now they want to know if they should continue holding on to this and if it'll reach their buy levels and what is the time period that they can wait for. Sunny, Yes Bank.
I'm sorry, I can't share my view on Yes Bank being an associate company of SBI. The compliance doesn't allow us to talk on any companies which are related to it.
All right, let's quickly take a technical check on this as well. How does Yes Bank look on the charts?
Yes Bank is looking really positive on the charts. Intraday, it has given a breakout of flag pattern in its daily, in its 60 minutes intraday charts, and I feel that this stock should be holded for a target of around 40 to 45 days in the coming months. The stock is really positive in all the time frame, be it weekly, monthly, or daily. Plus, it has placed well itself from above all the moving averages. So I feel definitely it should be holded for a long term.
All right, Deepika from Delhi is asking this next question. Astral Limited is the name of the counter that she's looking at, and she's bought at levels of 1925, and she's bought 38 shares. Ayush, on the technicals, she's looking at both the long-term as well as she's looking at a short-term perspective for the next 3 months. Would you hold or sell?
Well, I would recommend to hold because the stock is currently at the support zone of 50-day and 100-day moving average, which is coming out to be around 1880. As long as it is holding 1880 on the closing basis, I think you should hold the stock. And but the short-term target and the upside resistance is currently placed at 2015. So I think once it crosses 2015, then only we will see a bigger rally in the stock. 2015 will be the first resistance, and 1880 will be the support zone for the stock.
All right. Next up, we're talking about Ratan India Power, and this one's from Udit. They want to know if this is a good time to get into the stock. Now, if you look at 1 year performance, it's given over 200% gains. Sunny, would you suggest entering Ratan India Power right now?
So Ratan India basically again a thermal power company. So there are two plants which are operational in the company. One is Amravati power plant and one is Nasik. So the Amravati power plant continue to remain profitable. However, the Nasik power plant is yet to kick off the operation. And recently there was I think ruling from the NCLT that this power plant may be hived off and some new player will be buyer in this company. So kind of high risk, high return bet in case that Nasik power plant is divested and the only sole Amravati power plant continue to remain in the company, then one can expect a bump up in profit for Ratan India Power. So it's the stock is only for high risk, high return investor, and one need to be the allocation has to be proper in such kind of name. Maybe 1 or 2% of the portfolio should be the limit wherein one can bet on such names.
Okay, fair point. Gentlemen, do stay with us, and viewers, do stay with us as well. We will take more queries, but after this very quick break. Welcome back. You're watching Ask Profit, and the first question we're taking on this side of the program is from V.S. Mohan. He's writing in from Talcher, and he's asking about IndusInd Bank, which he's bought at levels of 1,530. Of course, in the recent past, you've seen the stock run up because of certain regulatory, or not regulatory, rather, stock exchange notifications that were sent out. But there was, of course, a clarification of the HDFC group. I'm wondering, do you have a view on this one, Sunny? What would you say for Mohan? Should he hold on to this one? Sunny, if you can hear me, we're asking about IndusInd Bank. Yeah.
I think one can hold on to the IndusInd Bank in a medium to long-term portfolio, and the bank continue to do well. And what we feel is that the fair value of the business is close to 1,800 rupees over the period of next 12 months. So please continue to hold IndusInd Bank.
All right. Next one's from Amit Rastogi. They want to invest into green energy sector for the next 1 to 2 years. Sunny, what are your stock picks within this sector?
So again, first of all, a word of caution. So we have already seen a lot of exuberance in the entire green energy space. So recently, one stock which was getting discussed was SJVN, again, one of the nodal agency for implementing a green energy project. So the stock which we like is SJVN, again, REC PFC. So ultimately, the power finance companies are the one which will get benefited because of this green energy project. And at the same time, a larger players like Adani and Reliance. So we have seen a new energy business being set up under the Reliance. So ultimately, that business will be see a substantial ramp up over the period of next 4 to 5 years. Adani, we are seeing a substantial ramp up in a green energy side. Tata Power, again, a group of Tata Group company doing a lot of work on the green energy side. Suzlon, again, on wind energy side. But again, what we have seen is that there is a lot of run-up which we have seen during the last 1 month. And maybe buy on dip is something which one should adopt if, in his or her portfolio.
A lot of long-term queries today, and Sani, I'm coming back to you on this one. It's a little long, so pay attention to this one. We've got ACE bought at levels of 68, Sangvi Movers bought at levels of 71, Escorts bought at levels of 750. All of this is from Sagar, and he's buying these companies in the construction equipment space as a proxy to the infra space. Because from his experience, and of course what we've seen in the past, is that some of these infrastructure companies have a significant amount of debt. So is it the right approach to have to use this as a proxy, and what would you say about the companies that he has picked?
Yeah, that's the right approach to ride an infrastructure growth story in India, and the company which we like within this space is Action Construction Equipment. So yesterday evening, the company has posted the very rock solid set of numbers. So profit has increased to close to 65 to 70 crore on a quarterly basis, and we are seeing a very strong reaction to that in the trade today. So for Escort, again, that's one of the business division as far as construction equipment is concerned. But the contribution to the overall top line is close to 25 to 30% only. And the majority of the profitability still comes from the farm equipment segment. So I think the right way to ride this sector, if somebody want to ride in construction equipment space, is through Action Construction Equipment is.
All right. Next up, we're talking about a recent listing. This is from Parag, and they're talking about Mufti. It got listed in December, and currently it's up in trade today about 1%. From the longer term perspective, Sunny, would you have a view on this?
Sorry, I missed the name.
Mufti. It's a Credo Brands Marketing Limited.
So Credo, so definitely it's a strong brand, and recently management has went on record to say that the brand has got a potential to grow at a 15 to 16% CAGR over the period of 3 to 5 years. So it's a typical apparel fashion-led consumer story. The brand is pretty strong and company continue to do well. So one can expect 15 to 16% of CAGR return over the period of next 3 to 5 years. So that should be the return expectation from the Credo, and I would recommend to buy with an investment horizon of medium to long.
Okay, fair point. I'm coming to you, Ayush. Sorry to keep you waiting. We've got Ramesh from Hyderabad who's asking about Max Health, which he's bought 25 off at 580 levels, and he's wondering whether to add more at the current market price. If not at this price, then at what level should he consider accumulating?
Weekly charts are very good. It is forming a higher bottom formation. I would say I would not recommend to buy at this current price, as this reward is not very favorable. 770 is the ideal buying zone for this stock. Today it has made a low of 799, and the previous support zone lies around 765 to 770. That would be an ideal investment zone for this stock. And in the long side, I can see a target up to 920 in this stock.
All right, next one's from Satya, and they're talking about RCF. They want to know if this is the right time to enter this stock from medium-term perspective. Now, Ayush, should they wait for a little bit of a correction in the stock, or should they just go ahead and buy this?
RCF can be bought at current levels. It has given a breakout of downward sloping trend line in its intraday charts as well, and it has taken a support of weekly trend line. So I think RCF is quite okay to buy now. The support zone for this stock is currently placed at 160. Once it crosses 175 on the closing basis, we'll see a big rally up to 200, followed by 224 levels.
Okay, this next one's also for you, Ayush, and this is on Birlasoft. We've got a question from Vivek, and he's got a call that he's bought at levels of at a strike of 860. What is the strategy that you would suggest that he employs?
I feel we should do a trading stop loss. Since I'm a technical analyst, I won't be able to give a derivatives call on this.
Okay, fair point.
All right, we'll take a fundamental question now. This is for the longer term. This one's from Sid on YouTube. They're talking about Rosari Biotech. They have bought the stock at 810 levels. Now, Sunny, I think they've given a guidance of about 10 to 12% revenue growth in FY24. Based on all this, how does this look for the longer term? Sunny, am I audible to you?
The entire chemical and specialty chemical sector is under pressure, and that is purely led by the global demand supply environment dumping by the China. So what I feel is that again, one need to be very patient as far as the investment in any chemical company is concerned, and the same applies to the Rosari Biotech also. So let us see when the sector, the dynamic will change favorably for Rosari. So let us, I would recommend to wait. Company, the business continue to do well in a good scenario. As of now, the overall market dynamics are not favorable. So it is kind of a hold, and let us see whether the things turn out in the next 1 or 2 quarters.
Okay, fair point. The last question, Ayush, is coming towards you. Lavish from Indore is asking about Time Technoplast, which he's bought at levels of 184, and he's looking for a 1-year time, rather 1-year target. What level would you recommend that he watch for?
Well, Time Technologies is a really positive stock. It has given a good volume as a breakout. The charts are looking really positive, higher bottom formation, well placed above the averages. I feel that the person should definitely hold it. If they want to add at current levels, they should definitely add it. There's a big target coming out for this stock in the recent time. I feel 232 should be there on the charts in the coming months, and once that is broken, we can expect a level up to 300 also in the stock. The stocks has shown a good value since quite some levels now. So I feel Time Techno should be bought at current levels, and if someone's holding, they should definitely hold it.
All right. Thank you, Ayush and Sunny, for joining us today. We're unfortunately completely out of time. And thanks for taking time out and answering so many questions for us. And viewers, thanks for tuning in. We'll be back tomorrow, same time at 11:30 a.m. But lots more coming up on NDTV Profit.
Hello and welcome to Earnings Edge. I'm Hiral Dadia and with me is Agam Vakil. Clearly, if you see, three stocks that we're going to focus on in today's day of trade on the back of earnings. You have GSFC that has reported numbers. We'll be talking to the management. Signity Technologies is the second one. And thirdly, Ajmera Realty, three from diverse sectors coming in there. GSFC is the first one, 5.5% kind of cuts coming in on this counter. And if you see it from an earnings perspective, overall, you have the revenues which have dipped, margins have taken a beating, and the profits are down 71%. Mr. V.D. Nanavati, Executive Director of Finance and CFO at GSFC, joins in. Mr. Nanavati, good afternoon and welcome to the show. What's gone wrong this time around? Because clearly, you have seen headwinds in the external markets which are causing this kind of a dip. But how are you seeing the trajectory going ahead?
Yeah, so subsidy reduction against the rise in input was the main headwind that stuck in Q3. Most of the fertilizer companies are also sailing in the same boat. But going forward, we expect things to improve, not immediately in Q4, but next financial year. Maybe post-election, government will take a reasonable call on subsidy versus input price, and that should help in improving the margin.
Mr. Nanavati, this is Agam here. Can you tell us a little more about the demand environment at the moment and how things are panning out in Q4 and perhaps how things could possibly change in FY25 going in?
Yeah, so on overall basis, FY24, we expect a growth of 10% in fertilizer volume, and FY25, we see a growth of 25% in fertilizer volume. So we look for a robust demand and our brand value and the quality to play around. The new plant that has been commissioned in January 24 of ammonium sulfate, that will help in driving the volume in part, and Sika unit 100% production will help in increasing the volume. So we are sure to have turnaround in next year.
Okay, Mr. Nanavati, also a word on your capital expenditure. I'm looking at the investor presentation and you do have capacity expansion plans on the annual as well. Can you tell us about the kind of investments which will go into your capital expenditure and what kind of expansion, after the expansion, what kind of capacity can we expect from the company?
Yeah, so we are expanding HX Crystal project. We already have one plant. We are setting up another plant that goes for the pharma intermediates. There is a plan for setting up sulfuric acid plant. Then there is a solar plant coming for reduction of energy cost. And then we have a urea revamp plant for reducing the energy consumption for production of urea. So all this thing will be commissioned by FY25 year end, and we expect this to cost 1,000 crore capex.
Right. Mr. Nanavati, when you're talking about this 10,000 crore capex and the plans that you have, with the performance that we've seen right now due to the external headwinds, do you think there could be a delay in terms of spending the capex because the utilizations could be lower? So is there a change happening on that front?
No. As most of the plants relate to fertilizer segment. So as I said, we look for 25% rise in volume. So there is no question of this plant not operating fully. So in fact, we expect the plant to run. Of course, there are teething problems at the beginning, but then they will stabilize and produce fully.
Okay. So in terms of your ongoing projects, you have the HX Crystal project. You also have the 15 megawatt solar project in Charanka. Also the Urea 2 revamping project. Can you talk us through the timelines? You have mentioned a bit of that in your presentation. Can you talk us through how things will pan out here?
Yeah, so solar project is expected to be commissioned in June 24. And then sulfuric acid and HX crystal will be coming by September and November 24, and urea revamp will come by February 25.
Okay. So if you have to look at FY24 and 25, what's that milestone expected to look like in terms of top line revenue and margins, taking the current run rate into consideration, and the additional sales that you will see on the back of the capacities that will come on stream in FY25 as well?
So right now we have not formed up our next year budget in terms of financials. So it will be little early to say top line and expected bottom line for FY25. We'll come back to that once it is finalized. Maybe we'll have a small call on this.
Sure. Finally, a word on debt as well. With the plans that you have on the annual, do you think that we could perhaps see that particular component increase going ahead?
Right now we are a debt-free company, and for 1,000 crore capex, I don't think we need any debt. So our recurring profit and past reserves are sufficient to give us the required funding. So, but when we come with the larger capex, those are also in the pipeline at different stages. I think debt will be required, but definitely not anything in FY25.
Okay, Mr. Nanavati, we leave it at that. Thank you so much for joining us and taking us through this quarter's earnings. We wish you the best. Well, on that note, it's time to slip into another short break, but we'll be back with more management. Stay tuned in. Welcome back, and now we take stock on Signity Technologies. Well, we've had earnings from there as well. Let's take a quick look at how the stock's faring. Well, marginally in the green for now, so certainly advancing, but it's been a little bit of a choppy day of trade for this particular company. That said, it does certainly look like a pretty steady quarter where we have seen revenues grow about 3.6%. And margins are largely flattish, barring the marginal decline. But let's get in the management of the company. We have Krishnan Venkatachari, CFO of Signity Technologies. Krishnan, good afternoon. Thanks for joining in. Can you take us through the quarter's highlights? What's led to this? And what are the expectations, keeping in mind the pipeline as far as deals go for this particular company?
Good afternoon, and thanks for the opportunity. It has been a pretty stable quarter considering the economic environment and where we were about a couple of quarters back as to what we envisaged. I think we were still our strategy in terms of working with strategic and growth accounts categorized and putting our efforts into these directions, and also coupled with that on the digital transformation has helped us consolidate the positions while the growth has been marginal at about 3.5%. But I think on the client wins, I think still we have won about 9 clients during the quarter, which is always a muted quarter with Thanksgiving and New Year and the decision making getting deferred. So that is one thing. And then our strength has been within the top 20 clients and the top 50 clients continuing to contribute in a bigger way for us, and which has been our strategy in terms of trying to push through and focus and garnering and winning a sizable pie through these larger clients. That is one thing. Having said that, I think on the margin front, we are while we anticipated the margin to move up, it would have been at about 14.9% on a normalized basis. But I think as a one-off expenditure on legal, we had to spend on certain employee separations, and that was essential and necessitated for us to get it out of the books. And that settlement took a toll, and we are fine with that. We know that for sure that will bounce back, and we're trying to improve on the margin front. Overall, for the year, if you look through, basically, I think the 3 quarters have been a progressive quarter, but I think the quality of the revenues and the consistent and the stability and predictability has increased beyond the level. And while we anticipated that, we initially anticipated that we should do at a CAGR of average of about 20-22% over the next 4 years. I think that took a setback during the current year, where the growth could be in the region of about 8 to 10% comparing to year over year for the reasons in terms of the client deferrals and the economic environment. I think barring that instance, probably, I think we are optimistic, and we are running at the while we'll be able to sustain and maintain the EBITDA in spite of all these one-off expenditures up to the last year levels in terms of trying to get there. But I think the efforts on basically to improve it in the next year. We have just concluded the strategic discussions in terms of how much do we grow and what are the areas to focus and where we would move ahead with respect to the EBITDA in the coming financial year and thereon.
Right. Krishnan, Hiral on this side, one question I want to take with you on the margin front is clearly you have a strategy where you've actually started removing the low and negative margin customers, and high margin ones were onboarded as well. Now, taking that into consideration, the margin profile is still in that 12 to 12.5% range. How long do you think it'll take you to get back to that 20% mark, which we have seen in the past?
Yeah, I think in the peak history of the company, we have been there at about 17%, and currently we are hovering around 14%, which is at about 13.8. If you look at it on the EBITDA, you're talking about EBIT, probably I'm talking about the EBITDA. At a EBITDA level, probably we have measured, we are there at about 13.8, 14% thing. We are, as I told you, that we are taking extra precautions on the process front in terms of the businesses so that we don't slip out on this one-off expenditure. But I think we are pretty confident that we'll be able to get to the 16% in the coming year. That's a target in terms of taking a strong growth coupled with all this digital engineering and with the optimizations in various areas what we are trying to look through. I think we should be there at about close to 16% plus. If you ask me honestly that whether we'll be there at about 20%, the whole idea in terms of 2028 to reach, the original plan was to reach to $1 billion and move north of 18% plus to be there at about 20% or so. Is there? That's a target where we will have completely the digital engineering space contributing about 55% and 45% from the quality engineering space. That's a target, and it's a step-by-step target. But I think for sure in the coming year we should be there with a margin. I think it's a good point that we are trying to eliminate all the low margin yielding accounts, and even in this year and during this quarter and the coming quarter, we are eliminating few of the accounts, which should give a thrust for us in terms of enhancement in the margin here.
Right. Krishnan, in terms of the various segments in the clientele that you do cater to, where is it that you are seeing most amount of traction? Now, I understand that banking and financial services, at least for the industry, well, it's been a challenging environment. But how are things panning out there? And how are things panning out when it comes to your airline segment, for that matter, communications and energy and utilities? Can you talk us through this?
Yeah, absolutely. Fine. So if you look at banking, finance, and insurance, BFSI as a sector, if you look through very clearly that while the sector has been shaky, I think we are trying to position ourselves very clearly with respect to few of the banks, trying to be very clearly with them in terms of as an integrated partner. So with that being the case, basically, we have not seen challenges because we have not gone out and all and sundry to pick up the entire business which is coming through the segment. We have been selective, we have been careful, we are trying to get through using our tools to be a strategic partners with respect to these large banks and a few of the insurance companies. I think it's a very measured thought process which we are going. The traction what we've seen though there has been toughness in the market probably is on the retail and retail as a segment basically. I think we are contemplating with the idea as to how do we give a thrust to that basically because there's a lot of traction which we have seen in that as a segment, and then we expect a few positive surprises to come through in that segment which will come out at the right time if the kind of negotiations what we're trying to do, and that sector could yield us a sizable chunk of revenue. When it comes to travel and hospitality, I think the sector has bounced back. There is a frenzy travel which is taking place as we have measured clearly. The segment which took a hit during the corona and post-corona, but I think it has bounced back clearly on that segment invariably. If you look at for us as a segment, I'll come back to the energy sector, but I think the energy sector contributes at about close to 12% of the revenue, while the BFSI, retail, and the healthcare segments all put together contribute about close to 70% of the revenue. We see a huge traction in the healthcare as a sector because we work with medical tech companies, and we have mastered the art of trying to do the quality engineering on the medtech devices, and then that is one thing which is leading to a cross-selling of business for us. So I think we are optimistic on that as a segment. Having said that, probably we are trying to focus on a couple of segments, especially to lead it as a driver to contribute about close to 60% of the business, and which is what could be the strategy coming through in the current year. And one is positively on the retail side, and the other one is that we are trying to get through to BFSI as a specialization to contribute about 60% and then focus on the rest at the 40%. Coming back to the energy and utility sector, there has been a lot of consolidation in the energy and utility sectors. We did feel the pressure while the business has been contributing, say at about 12% or so. But I think the pressure on these sectors basically and their consolidations definitely has stagnated a growth a bit, while there is potential, but I think there is a stagnation.
Right. So I think these are few segments that one will be watching out for as well, pretty closely in trade. Thank you, Krishnan, so much for joining us on the show. Completely out of time. But clearly, overall, if you see in terms of the stock performance as well, last 1 year, around 70% is the kind of returns that we've seen on this counter. Let's quickly slip into a short break. Up next, we'll be joined by the management of Ajmera Realty. Yesterday, post earnings as well. The stock was seeing double-digit gains today as well. If you go to see in terms of Ajmera Realty, positive momentum is what is expected to continue. Please stay tuned.
Welcome back to Earnings Edge, and we now take stock of Ajmera Realty, where we have Dhaval Ajmera of the company who's joining us on the show right now. Dhaval, thanks for joining in. It doesn't certainly look like a very, very strong quarter for you. And we've seen good volumes, not just for the company, but also for the industry in general across. Can you tell us about the current business environment, the kind of inventory that you hold at the moment? If all of it is gone, well, what sort of projects are we looking for and forward towards going into this, not only this quarter, but also in the next financial year?
So, we've had a great run through this quarter. This was been our best quarter in the last decade. Overall, the company has been, doing phenomenally well. We are working for a target of 5